Good afternoon, ladies and gentlemen. Am I audible that side?
Yes, you are.
Yes.
Very audible.
Okay, thank you so much. Can I start? Is everybody ready to listen to my submission this afternoon? Mrs. Sikana?
We are ready and I'm recording. You can start.
Okay, once again, good afternoon, ladies and gentlemen. My name is Simon Chiziba, and I will be starting with introduction and also providing a background to Botswana Telecommunications Limited. My group comprised of 4 members, myself, and then Gialebo Disho, Johan Baesi, and then our Madam Speaker, Diapo Mongwaketsi. And our presentation is going to follow as per indicated in the slide. I'll be taking you through the introduction and background, and then Gialebo Disho will take us through the profitability and liquidity ratios, and then Johan Baesi, the market and the efficiency market and operation ratios, and then ultimately we'll have Madam Mamawaki taking us through the short analysis, the recommendations, and the conclusion. Next slide. These are our contents, as will be indicated as we go on. Just a bit of introduction on Botswana Telecommunications Limited, BTCL. The Botswana Telecommunications Corporation Limited, BTCL Financial Performance for 2020-2021 was critically evaluated based on its financial statement. And then the financial statements are contained in the company's annual report, as is common knowledge. And then they also describe all the company's activities throughout the preceding year. A financial statement it has a statement of income, cash flow, and also the shareholders' equity statement. And also it gives shareholders or all the interested parties more detailed information about the activities of the company, as well as the financial health of the business. Next slide. Just a bit of a background on Botswana Telecommunications Limited. It started operating in 1980 as wholly owned wholly owned by Botswana government, and in other ways we can say it's a parastatal. This organization was transformed from a parastatal to a public limited company and listed on the Botswana Stock Exchange in 2013, with the government being the major shareholder at having a 51% stake. It opened business for citizen economic development with 50,000 of its shareholders being Botswana. And then the services that BTCL offers is the mobile and the fixed solutions, through which customers access voice, short messaging, commonly known as MSMSs, and broadband data products. And the solutions are tied into 4 categories, being the home, residential connections, consumer, individual convenient solutions, and then enterprise based on postpaid contract-based solutions. And then moreover, BTCL also offers services such as cloud, mobile connectivity, office internet, voice, and collaborations. Looking at Botswana Telecommunications Limited financial highlights, the company's annual turnover stands at 1.43 billion pula, with a staff complement of 980. And then the profit after tax for the year 2021 was 16% higher than in 2020. And then the earnings before interest, tax, depreciation, and amortization for the same period was reported to be 4% above the previous year. And the earnings per share grew by 16% above the previous year to 12.89 tebe. And then also it experienced an increase of the cash flow from 120 million pula to 364 million pula, which was an increase of 204%. Now, because the main essence of this particular presentation this afternoon, we were just going to be analyzing the statements, and then this process, using the process of ratio analysis to interpret the financial statement. This particular process enables the investor to make an evaluation of the company's performance based on profitability, risk, and efficiency. Financial ratios are very important and very vital, as they also assist an organization to make comparisons and to track to see where there might be some loopholes or gray areas with you know, the hope of making things improve. And with that, ladies and gentlemen, I'll now hand over to Mr. Kalebradisho to take us through the financial ratios, which you know, our discussion this afternoon is based on 5 of them, as seen here, that we are going to be considering in assessing the business performance.
Thank you, Simon. Like someone has indicated, good afternoon, ladies and gentlemen. Like someone has indicated, I'll be looking at profitability ratios and the liquidity ratios. I'll start off by looking at the profitability ratios. We have 5 of them that we looked at. That is your gross profit margin, operating profit margin, net profit margin, return on assets, and return on equity. The 3, they look at the profit margin, and then the 2, they look at the return. Okay, we know that they assess the entity's ability to earn profits from the sales or operations of the business. That is, we also look at the assets, and then we look at the shareholder equity. They also it's also very important that they are looked at for various years, so that we can make an informed assessment to say whether the company is doing well or not. It is important that we compare the years, like we are going to demonstrate now, so that we make a conclusion as to whether the company is doing well. This slide here speaks to the formulas of computing the profitability. Like I've said, we have the 3. That is those that look at the profit margin, being the gross profit margin, which is computed as gross profit over sales times 100. And then we have the operating profit margin. This one here, we divide the operating profit by the sales of the business, and then the profit margin looks at the net income over sales. And then on the return ratios, we have the return on assets, which is computed by dividing the net income over asset, expressed as a percentage. And we have the return on equity, that is your net income over the shareholders' equity. I'll ventilate more on each one of them in the following slide. We know that the gross profit margin ratio compares the gross profit of a company to its revenue. That is to say, how efficient is the business doing, looking at its operations. The ratio is crucial to investors because, like I said, it shows efficiency of the business. Hence, it gives one an existing or a prospective investor as to say, is this a business that can I associate myself with, or can I put my money in? In terms of the industry benchmarks, we look at the ratios that are between 50 to 70%. They are considered to be good. In the BTC analysis, we've computed the gross profit margin ratio for 2021 and 2020. For 2021, BTC stands at 56.81%, and there's a growth of 1.52% from 56.81% to 58.33% between the 2 years under consideration. We note that looking at the industry benchmark, BTC remain within healthy margins to say that is doing its business efficiently. But like we said, we cannot make a conclusion only on this one ratio. We need to also look at other ratios to say, is it really in the right direction, looking at other factors. And then the second one is the net profit margin ratio. This one, it says the ratio measures the profit of a company that it produces from its total revenues. By industry benchmark, a ratio that is between 5 or below 10% to say a limit of 5% is considered to be low. 10% is healthy, and 20% is even more healthier. Now, in our case, we know that for the years under consideration, that is 2021 and 2020, BTC posted 8.24%, which was slightly low, and then it's more on the increase because we know that it's 18.11%. We also look at the performance in terms of its income. There's a growth there in terms of its income from 2020 to 2021. And then also, sorry. Sorry about that. Okay, net profit ratio. I was about to say, we note that the total revenues also increased from 1.416,97 to 1.426 in 2021, which shows that the company is on a positive path in terms of its revenues. That is quite a positive thing to note. Next is the operating profit margin. Operating profit margin measures what the business has earned after selling its services and expenses to meet its day-to-day operations. This ratio here, by the industry benchmark, if it's higher than 15%, is considered to be good or good for one to put their money in. So for BTC, 2020 it's sitting at 8.24%, which is quite was quite on a risky position. But now we know that there is an upward increase to 9.49%, which is quite promising in the year 2021. We hope that it maintains that upward trend in the subsequent years to come. And then we also note the return on asset ratio, which shows how profitable a company assets are. 5% is considered to be good, while 20% or more represent a strong asset base. This is the industry benchmark. In our case here, the company in 2020 was slightly below what is considered to be good by industry standard, and then it moved up to 6.17%, which is also showing a positive increase in 2021. We also note an improvement in the assets from 2.8 to 3.0 between the years under consideration. Also, what noting is the net income that is also it went up from 116.7 to 186.9 between the 2 years under consideration. I move on to return on equity ratio. The return on equity measures the profitability of a business in relation to shareholder equity. That is, how much is the shareholder earning in terms of in relation to what they are putting into the business. By industry standards, a measure that is between 15 to 20 is considered to be good. In our case here, we know that in 2020, BTC was at 4.64, which is not a safer margin, but we, like other measures, we know that it's on a growth path because it increased from 4.67 to 7.14%. Moving on to the liquidity ratios now. The liquidity ratios, they measure the ability of an entity to meet its short-term obligations or the short-term debt obligations, that the extent to which the cash and cash liquid assets can cover the debt obligations. This also is a measure to a prospective or an existing investor as to whether the company can acquire debt to meet its debt obligations, or can it acquire that to expand its operations. The slide here shows the computation of the three key ratios that I've talked about. That is the quick ratio. Under the quick ratio, we have the quick ratio, that is current assets minus inventory over current liabilities. Here we say we take out the inventory because we consider it not to be liquid, and then we test as to whether the company can cover its assets without the inventory item. And then the current ratio measures the current assets over current liabilities. That is an entity's ability to pay off its short-term obligations with its operational resources. We are looking at cash, inventory, and receivables. And then the cash ratio, that is the ratio of, it measures the ability of an entity to use its cash and cash equivalent against its current liabilities. So I will go on to the actual computation for BTC, so that we test whether BTC is in a healthy state for the 2 years under consideration. Here, in terms of the industry benchmark, a quick ratio above 1 confirms that the business is indeed in a healthy state to pay its liability. We know that for both 2020 and 2021, the company was above 1, which shows that it's indeed in a healthy stage for both years. And also we know that that is on an increasing path, which is quite promising. I move on to the next one. The next slide only shows the trend from 2017 to 2021 as to how the ratios have been performing. We know that the company still maintains the safer position across the 5 years under consideration. That is on the trend. There's a slight decline because the stock market was being quite well, which is one of the reason why there's a substantial decline between 2018 and 2019. And then we know that there is a slight increase between 2020 and 2021, which is quite promising. Now, in terms of the current ratio, the current ratio, we know that the company still remains within the safer margins. Like 2020, it recorded 1.13, and then it increased to 1.5, which also shows that the company is in a good position to meet its debt obligation in the short term. We also know the trend there. It also does the same. It sort of dropped between 2018 and 2019 for the same reason of the market share that I've alluded to. And then it also is on the increase to 1.5 in the year 2020, which is quite promising. The cash ratio for BTC in the year 2020 was at 0.35. By industry standard or the industry benchmark, we know that any ratio not lower than 0.5 is considered to be preferred. In our case here, we know that in 2020, it was slightly below that benchmark at 0.35, which was quite unsatisfactory. But we note an increase of to 0.88, which is quite promising in the year 2021, which we hope that it maintains that interesting position. Now I'll hand over to my colleague to take us through the efficiency ratio, my colleague Reba AC. Thank you very much.
Ladies and gentlemen, our salutations have been observed, and it is with enthusiasm that I recognize the succinct and strong submission by my colleagues, so that I can submit to you the efficiency ratios, among others, with ease. Without wasting much time, ladies and gentlemen, what is efficiency ratio? In our context, it is a ratio that is very instrumental in measuring the business ability to optimize its asset in the pursuit of emphasized sales. In other words, ladies and gentlemen, on annual basis, business expect to make money by selling products. So this ratio tests that. We further confirm that a less capital and debt is required to sustain it, ladies and gentlemen. These ratios are very key, especially that they enable us as BTCL to compare our results with our fellow competitors in the market, which is very key in us in innovating and coming up with the necessary intervention to improve our financial performance. Moving on, ladies and gentlemen, I'll characterize the key efficiency ratios, which are asset turnover ratio. As I said earlier on, it is very important to measure the value of an organization in relation to its asset. What is the organization without its asset and knowledge of the impact of its values? So it will be needless, ladies and gentlemen. I move on to characterize the inventory turnover ratio. I submit, ladies and gentlemen, that it is very important again to test if the business is able to convert its inventory within the defined time. This is very important to enable the business to keep the inventory at its lowest possible level, while ensuring that it stocks accordingly. Moving on to the days sales inventory ratio, ladies and gentlemen. This ratio is very key in estimating the movement of stock from time to time, as I have alluded above, ladies and gentlemen. Moving on, the asset turnover ratio. It is norm across the financial industry that this ratio is used by most institutions mainly to illustrate how the business is able to convert its assets to cash. So in a nutshell, ladies and gentlemen, the fixed assets turnover stand at 0.49 times, while as in the year 2021, the fixed asset turnover stand at 0.47 times. What does that mean? It means that most analysts consider the ratio of above 1 to be good or healthy, but ladies and gentlemen, it entirely depends on the industry. Hence, there is no universal value attached to it. In the context of BTCL, the turnover is less than 1, which in our view, ladies and gentlemen, it symbolizes that it declined in comparisons to 2020. Moving on, the inventory, ladies and gentlemen, as stated earlier on, the inventory turnover ratio is key as it confirms how the business is able to convert its sales to money, which is very key for any existing business, ladies and gentlemen. And we the ratio symbolized for both years, it confirms that the extent at which the business was converting its assets is very high, as it increased from a 12.4 in 2020 to 13.1 in 2021. What does the best practice teaches us, ladies and gentlemen? A good inventory turnover for most industry ratio, it ranges between 5 and 10%. BTCL managed to sell its inventories for 12.4 times in 2020 and 13.1 times in 2021. Ladies and gentlemen, this correlates with the increase in profit observed over the same trading period. Moving on, ladies and gentlemen. Day sales inventory, ladies and gentlemen, there was an improvement in the inventory stock movement from 29.4 days observed in 2020 as illustrated in the table, ladies and gentlemen, to an equivalent of 27.8 days in 2021. This shows a rapid sales products, ladies and gentlemen, which was key in driving revenue increase. Moving on, ladies and gentlemen. Now we I'll talk to you about the key element of BTCL, which is market analysis. Why is it important? It is very important for us to demonstrate how cumulative total assets, total sales were made by the business over a specified period, which in this case is the year 2021, ladies and gentlemen, in comparisons with the industry, based on overall industry sales on a given period. Yes, ladies and gentlemen, I confirm that the ratio informs the business about its market share and product competitiveness. Ladies and gentlemen, once again, in comparisons with what? Its competitors. The market volatility is another key determinant of business resilience in each market segment. You will recall, ladies and gentlemen, that we are simply characterizing the ratios of a Botswana stock listed entity. The more stable the business, ladies and gentlemen, the higher are its chances of growth. Moving on. Here, ladies and gentlemen, we were just illustrating the market analysis ratios. We have what we call the pricing earnings per share ratio. We have also what is called the book value per share ratio, ladies and gentlemen, that I'll characterize momentarily. In closing on this aspect, we have what we call market per share ratio and market capitalization, which is very key in informing us about how strong the business is. Moving on. The price to earnings ratio, ladies and gentlemen, in the year 2020, it stands at 0.13. In year 2021, stands at 0.22, which is an improvement in comparison of the 2 years. The ratio measures the BTCL net income per share based on outstanding stock. What do we mean by outstanding stock? We are saying that we are referring to the total stock that is in the market. You'll recall that the stock stands at 1.05 billion, ladies and gentlemen. This exhibits the business profitability to current and prospective investors. It is very important in informing an investor if they can invest in the business or not. We move on, ladies and gentlemen. The book value per share ratio. Once more, ladies and gentlemen, it compares company shareholders' equity based on the number of outstanding shares. Traditionally, any value under 1 is considered to be good book value. Ladies and gentlemen, the ratio also informs investors. These I'm referring to internal and external investors on the business shares in circulation and their values. BTCL book, ladies and gentlemen, the value per share ratio is 0.29. We move on for your pleasure. The market value per share, we have overemphasized this, ladies and gentlemen. Now, it is very important for our investors to note that BTCL market value per share currently stands at 7.3. This is very, very important, as most investors are interested in knowing the market value per share of a business prior to investing or buying the shares in the institution. Moving on, ladies and gentlemen. To what extent is BTCL capitalized, ladies and gentlemen? Here we are saying that the overall business value based on its outstanding shares, which I characterized a moment ago. The current BTCL shares price is 0.73 or 73 table, ladies and gentlemen. Therefore, multiplying the share price by the outstanding shares of 1.05 billion, ladies and gentlemen, give us an effective market value of BTCL, which is standing at 766,500,000, ladies and gentlemen. The information is there on the market, ladies and gentlemen, for your further appreciation. The business stock trading results are not a true representation of business value. Hence, the market value can be misleading. It is very important, ladies and gentlemen. We cannot solely rely on it. Moving on. operation ratio, ladies and gentlemen, here I will share with you this ratio primarily to enable you to deduce how it informs and influences BTCL trading. The ratio simply illustrates its efficiency based on management in comparison with the operating expenses. In other words, ladies and gentlemen, we are simply saying that what are the operating expenses that the business incur over a specific trading period in comparison with its net sales? Is it really sustainable for the business to continue operating in the foreseeable future? In closing on this particular aspect, ladies and gentlemen, the absence of debt in computation of the ratio result in misleading profit view. What do we mean? We are simply saying that when it is being computed, it is norm that debt is not considered. Therefore, not considering debt may be suicidal to any institution, ladies and gentlemen. Moving on. Now, to share with you the computation of the operation ratio. In the year 2020, they stand at 1.9%. In year 2021, they stand at 6.7%. Operation ratio between 15 and 5 are generally considered healthy. Healthy meaning that the business is sustainable in the sense that it is profitable. A ratio of above 3 may indicate that the company is not using its current asset efficiently. Ladies and gentlemen, we move on. Where we are, ladies and gentlemen, you will allow me to hand over to none other than our versatile Tiapo to conclude. Thank you.
Thank you very much, Rebaesi. To conclude on our presentation, we also made time to look at the SWOT analysis of our financial statement. We looked at its strength, its weaknesses, its opportunities and threats. We found that the statement is published in the media for public appreciation. And the statement was reliable because it was an audited statement. The statement can be compared to other similar companies that are in Botswana and globally. The statement allowed us to calculate key ratios, financial ratios. And BTCL is listed with the Botswana Stock Exchange. Some of the opportunities that we found with our financial statement is technological innovations, that the new revenue streams can be innovated, and also unserviced markets that is available, the BTCL can take care of the opportunity. Nevertheless, there are some weaknesses with the statement. The declining share price, underutilized infrastructure, financial analysis is limited only to the information that is given in the BTCL financial statement. So whatever that was not there, we could not salvage. But there are some threats like lack of market barriers, because if there are market barriers, they limit competition, therefore maximizing profit, political instability, financial risks, and exchange rate risks. Move on. We also made some recommendations that can help the BTCL business to grow. BTCL market share can be improved and increased by acquisitions. We also looked at the marketing strategy tool by Aiko Asof. This is a very, very, very important marketing tool because it is utilized globally in businesses as a core business strategy tool. This tool look at new and existing products that the company can do in order to grow. It looks at the market penetration strategy for existing products. It also looks at market development strategy. And for new products, it looks at product development strategy and the diversification strategy. So we are saying that in order for BTCL to grow and make profit, it should adopt the ASOF metrics and have a robust marketing strategy to rehab the share activity. Then they can increase their sales and existing products in the current market, and they diversify and introduce other new products in the market. We can go on. BTCL should build brand loyalty by engaging with customers regularly, and it should also improve profit margin by reducing overall operating costs, that is office space, employee spending, equipment repairs, and shipping. Move on. Now to conclude, all measures indicate an improvement in the financial performance of BTCL in 2021 when we compare it to 2020. In 2021, the rise in return on equity in 2021, BTCL has a rise of 14.0% on the return on equity. And this indicates that BTCL took debt to finance their assets. We also saw that the BTCL liquidity ratios remained within safer margins for the periods under review, that is 2020 and 2021. However, BTCL was less efficient in 2021 as their assets were turned over at a slower rate using sales. The BTCL market shares has experienced a decline since 2017 up to date, hence the need for some strategies to resuscitate its shares in the stock market. Thank you.
At this juncture, ladies and gentlemen, we may tolerate your comments, questions, and inquiries. Thank you.
PS all went well. Nobody has got questions.
Okay. Hello, Tim. Can you hear me?
Yes.
Yes, ma'am.
Okay. In the absence of any question from other team members, I have a question. You reported that it is easy for BTCL's financial statements to be compared with others in the industry or outside the industry. What makes that possible? What makes it easy?
Thank you for the exciting question. What it makes it easy is the fact that the financials are on public domain. Therefore, it is easy to appreciate the financials and make comparisons with the industry at large. That's why we kept on emphasizing the point that benchmarking will be done to appreciate how it is done elsewhere so that it can be important in improving BTCL's financials. Thank you.
Thank you.
This is Bokani.
Good afternoon, team. I have a question and a comment. Thank you very much for a very informative and very clear presentation that you made. But to me, I was thinking that whenever we are doing financial analysis for companies, we normally we know they are detailed, just like the report. I was thinking that a report needs to have an aim and it needs to be directed to a particular group of shareholders. We all know that we've got investors, we've got management, we have other shareholders, analysts, and the rest of the guys we know. Then to me, I thought maybe you could have just limited it down so that we really understand, because there are a lot of ratios, yes, we understand. But then as an investor, I need to pick up something at least from the report that, okay, fine, if you look at BTCL, for me as the investor, this is what interests me more. So to me, I also understood that you were looking at the year 2020 and 2021, and you were looking at financial ratios analysis. At some point, you also use trend analysis because you're using the years from, you even made a recommendation of 2017. So I thought maybe the title of your report should have been specific to a certain group of people with a certain period of time, because honestly, analyzing everything, it's so detailed. The other one is looking at your slide 1. I think there's need for correction because you have BTCL introduction there. It just got the year 2021, 2021. Maybe what you wanted to say 2020 to 2021, something like that. Your first slide. Thank you.
Thank you.
I don't think I get the gist of your first comment. I don't think I clearly understood what the point we're trying to put across. Maybe my colleagues can chip in. I didn't understand clearly what point we're trying to put across.
Okay, thank you. Assuming that I also understood her, you were of the view that we discussed many ratios which are needless. And in our report, we stated that we discussed the 5 critical financial ratios. You'll appreciate that the 5 main ones, they have sub-ratios. Therefore, it will be in vain for one to discuss profitability ratios without discussing the key ratios that brings about the profitability ratios. We stated in clear terms and succinctly that we are presenting this report for consumption of internal and external stakeholders by virtue of the institution that we are submitting on being Botswana Stock Exchange listed institution. It means that it is an institution that is on public domain. With that, we believe that we have adequately satisfied your comment. And on another note, we appreciate your comment on us checking if the year 2021 to 2021 is correct. We will look into that. We appreciate. Thank you.
Okay, thank you, Bokani. I will take the one on the trend analysis. Yes, indeed, we use the trend analysis, a 5-year trend analysis. The reason why we're using it, of course, we are looking at 2021, and then we compare it to 2020. But it was important for us now to check the trend as to how the company was doing. So the 2 years may not necessarily be adequate for you to make an informed judgment, like I said. Hence, we included the other preceding 3 years so that we make a thorough analysis as to what has been happening previously, because history is very important for a would-be investor to see how the company has been doing. It's not like we are reporting on 2017 per se. We are reporting on 2020. comparing it with 2021. And then in the process, we thought maybe we need to make a reflection as to how it has been performing since 2017, which we thought was important for the shareholder, the interested parties. Thank you.
Thank you.
Are there any
I would also
questions,
like
comments?
to add on the Bayesi.
Go ahead, leadership.
Okay. I also wanted to add on the one that we could have chosen a specific group and direct the financial analysis to. I think we should reflect back and know that we were addressing a question that were given to us that we should analyze the financial statement. So we were, we were doing all that we answered the question fully, because if we could have just answered the question like partially, because the question, the way it was asked, it's not clear that you have to direct your financial analysis to a certain group. It's not the same as the question, the second assignment, which is like clear that you have to do your financial analysis towards, company accusations. I think we should be clear that we are not doing this presentation just for the sake of it, but we are also doing it to answer a question that was asked.
Thank you very much, Chima answered.
Any question, comment worthy our consumption? Madam Dora, back to you. We take it that our audience is very enthused, as is the case with us. Thank you.
All right, I'll stop recording.